All right, imagine this. Bitcoin's in the middle of a raging bull market. Your portfolio's up 150%. You're basically feeling like Warren Buffett meets Satoshi, and then you make one split-second timing decision that costs you half your gains. Not because you got hacked, not because you panic sold, but because you fundamentally misunderstood how to time your moves in a Bitcoin bull run. Today, I'm breaking down the 3 timing mistakes that have absolutely obliterated people's gains during bull markets. We're talking about leaving 50% or more on the table, and more importantly, the exact framework to avoid becoming another "I almost made it" story in Bitcoin history. Quick heads up, this is for educational and entertainment purposes only, not financial advice. Do your own research, folks, and consult a pro before making moves. So here's the deal. Bitcoin bull markets are where generational wealth gets minted. We're talking about regular people turning 5-figure stacks into 6-figure paydays, early adopters becoming millionaires, and the financially savvy basically printing money while the traditional finance crowd is still arguing about whether Bitcoin is real. But here's the brutal truth. Most people completely botch their timing and leave massive gains on the table. And I'm not talking about newbies who just discovered Bitcoin yesterday. I'm talking about people who survived the bear market, accumulated at the bottom, and then fumbled the bag when it mattered most. The wildest part? These timing mistakes are predictable as clockwork. They happen every single cycle, yet fresh waves of investors keep making them like moths flying into the same flame. So buckle up, because we're about to dissect the 3 timing mistakes that separate the Bitcoin legends from the what-if stories. Timing mistake number 1, and this is the dream killer that haunts more bull runs than anything else. Selling way too early because you're scared of giving back gains. Let me paint you a picture. Bitcoin breaks out from 40,000 to 65,000. You're up huge. You bought at 30 grand during the depths of the bear market when your family thought you'd lost your mind, and now you're sitting pretty on a double up. Your neighbor who called you crazy is suddenly asking for Bitcoin tips. You're feeling vindicated, brilliant even. But then the doubt monster shows up. What if this is the top? What if Bitcoin crashes tomorrow and you lose everything? What if you're the idiot holding the bag? So you hit that sell button at 68,000, lock in your profits, pat yourself on the back for being disciplined, and feel like a financial genius. Except Bitcoin doesn't crash. It barely even pauses. It keeps absolutely ripping to 90,000, then 110,000, then 140,000, while you're sitting on the sidelines with your safe gains, watching everyone else get filthy rich with the Bitcoin you used to own. This is the soul-crushing nightmare that defines bull market regret. You survive the bear market, which is the hardest part. You buy low when everyone's terrified, and then you sell low relative to where Bitcoin ends up because you couldn't handle a 20% pullback that lasted 3 days. It's like training for a marathon, running 25 miles, and then calling an Uber for the last mile because you're tired. You were so close to the finish line and you quit right before the glory. And the worst part? This mistake is rooted in a fundamental misunderstanding of how Bitcoin bull markets work. See, most people think linearly. They assume Bitcoin will go up smoothly and any dip must mean the party's over. But Bitcoin doesn't move in straight lines. It moves in violent waves. Even during the strongest bull runs, Bitcoin regularly pulls back 20 to 30% before ripping to new highs. In the 2017 bull run, Bitcoin had multiple 30% corrections on its way to 20,000. In 2021, it dropped from 64,000 all the way down to 30,000 before eventually hitting 69,000. These aren't signs of weakness. They're features of the volatility that creates massive gains. But if you sell during these dips thinking you're being smart, you're actually just handing your future gains to someone with stronger hands and a better understanding of Bitcoin's behavior. The fix here is simple but requires ice-cold discipline. Set your targets based on market structure, not emotions. Before the bull run even starts, decide at what price levels you'll take partial profits. Emphasis on partial, not selling your entire stack. Maybe you sell 10% at 80,000, another 10% at 120,000, another 10% at 160,000. You ladder out as Bitcoin climbs, taking profits along the way while keeping most of your stack in play for the moonshot. And critically, you don't panic sell. during 20 to 30% pullbacks because you understand those are normal in Bitcoin bull markets. You either hold through them or, better yet, you buy them. The people who get stupid rich in Bitcoin aren't the ones timing every micro top and bottom. They're the ones who understand the macro trend and don't let short-term noise shake them out of generational gains. But wait, because timing mistake number 2 is even more painful, and it's the flip side of selling too early. This is the mistake of waiting too long to take any profits at all, because you're convinced Bitcoin's going straight to $1 million. Let me set the scene. Bitcoin's ripping. You're up 300% on your initial investment. Your portfolio's worth more than you make in 2 years at your job. Life-changing money is staring you in the face. But you don't sell a single sat because you've been reading Bitcoin maximalist Twitter, and they've convinced you that selling Bitcoin is for paper-handed peasants. You're hodling to Valhalla. Bitcoin's going to $1 million per coin, and you're never selling, ever. Except Bitcoin doesn't go straight to $1 million. It tops out around 150,000, starts pulling back, and you think it's just another dip to buy. But this time, it's different. This is the start of the bear market. Bitcoin drops to 120, then 100,000, then 80,000, then 60,000, and suddenly your life-changing gains have evaporated. You're still up from where you started, sure, but you just watched 70% of your peak gains disappear because you were too stubborn to take any profits at all. This mistake is insidious because it feels noble. You're not a weak-handed trader who sells for fiat trash. You're a true believer, a Bitcoin maximalist, a hodler of last resort. Except here's the harsh reality: not taking any profits during a bull market when you're up. Life-changing amounts isn't conviction, it's gambling. And gambling with generational wealth is how you end up with regret that lasts a lifetime. Because here's what nobody tells you: Bitcoin will have another bear market. It always does. The cycles are as predictable as the seasons. And if you ride the entire bull run up without ever taking profits, you're going to ride most of it back down too. The smart play isn't never selling. The smart play is strategically taking profits along the way, while keeping significant exposure for continued upside. Maybe you take out enough to pay off debt, buy a house, or set up a safety net that changes your life even if Bitcoin goes to zero tomorrow. That's not betraying Bitcoin. That's being a functional adult who understands risk management. If you're nodding along thinking about your own setup, what's your plan for taking profits in the next bull run? Or are you planning to hodl through the entire thing? Share in the comments. I read them all, and I'm genuinely curious how people are thinking about this. Now brace yourself for timing mistake number 3, because this one is brutal, and it catches even experienced people off guard. This is the mistake of re-entering at the wrong time during a bull market. Specifically, buying back in at higher prices after you've already sold, thinking you're catching a dip when you're actually buying near local tops. Here's how this disaster unfolds. You sell some Bitcoin at 70,000 because you want to take profits. Fine, reasonable move. Bitcoin pulls back to 65,000, and you think, perfect, I'll buy back in at a discount and increase my stack. So you buy at 66,000 on the way back up. Except Bitcoin doesn't keep going up. It was a dead cat bounce. Bitcoin drops to 55,000 and you panic. You think you made a terrible mistake buying back in. So you sell at 57,000 to cut your losses. Then Bitcoin actually does find a bottom at 52,000 and rips to 90,000. But you're not in anymore because you sold again. Now you're watching from the sidelines, having lost money on your re-entry trade while Bitcoin moons without you. This is the trader's curse, and it's killed more bull market gains than almost anything else. The problem is that once you start trying to time entries and exits during a bull market, you're playing a game that requires perfect timing, zero emotions, and the ability to predict short-term Bitcoin movements, which is basically impossible. Even professional traders get this wrong constantly. The more you trade in and out, the more likely you are to get chopped up by volatility, miss the big moves, and end up with less Bitcoin than when you started. This is why the just hodl meme exists. It's not because hodling is always optimal. It's because for most people, trying to actively trade Bitcoin during a bull market leads to worse results than just holding on and riding the wave. The solution here is to pick a lane and stay in it. If you're a hodler, hodl through the volatility, and take strategic profits at predetermined levels. If you're a trader, accept that you're going to miss some moves, cut losses quickly, and don't revenge trade. But the worst thing you can do is be a hodler who becomes a trader mid-bull market because FOMO or panic takes over. That's how you end up with less Bitcoin and more regret than you ever thought possible. So, let's bring it all home. The 3 timing mistakes that cost you 50% gains in Bitcoin bull markets. First, selling way too early out of fear and missing the massive gains that happen in the back half of bull runs. Second, never taking any profits at all and riding your peak gains straight back down into the bear market. And third, trying to time re-entries by trading in and out during bull market volatility and getting chopped up in the process. These 3 mistakes have destroyed countless people's bull market dreams, turning sure thing wins into devastating losses. But now you know what they are, why they're deadly, and exactly how to dodge them. Bitcoin bull markets are the greatest wealth creation events in modern financial history, but they require strategy, discipline, and an understanding of timing that most people simply don't have. The key is finding balance. Take some profits along the way without selling your whole stack too early. Stay in the game for the big moves without being so stubborn that you ride it all back down, and resist the urge to trade your way to prosperity when simply holding and laddering out is the smarter play. If this video helped you think differently about timing your Bitcoin moves, smash that like button. It seriously helps push this to more people who need to hear it. Subscribe for more Bitcoin truth bombs that cut through the noise. Hit that bell so you never miss a video, and share this with anyone in your life who's navigating their first real Bitcoin bull market. Drop a comment and let me know. What's your biggest timing concern for the next bull run? Or what mistakes have you already made that you're not repeating? I want to hear your stories. Thanks for watching. Stay sharp, keep accumulating, and I'll catch you in the next one.